Now, GameStop is a name you mightn't have heard of until last week. I'd be surprised if you hadn't seen it in your social media feeds this week, though. The US video game retailer's share price has surged on the back of online investors and activists, but that's left some hedge funds seriously out of cash. Matthew, in our social media news desk at Cube, has got the story. What is going on, Matt?
Well, Oliver, when we think about the traditional stock market, investors invest in those things that they think will do well. So, for example, Apple. Consumers are likely to continue buying iPhones, or potentially in 2021, companies that are producing face masks. And on the opposite side of that, if you think a company is in decline and you think it's outdated and its stock is overvalued, investors can bet against this company to make money. This is something known as a short. And that's where GameStop comes in. This is a company that has retail outlets across the United States, allowing people to rent and buy video games. Of course, during the COVID-19 pandemic, and before that, in fact, as well, this industry has increasingly moved online. So a lot of investors thought that GameStop's business model was outdated, so they bet against it in shares by buying these shorts. Now, essentially, what has happened there, they were expecting to see its stock decline, but actually quite the opposite has happened. If we take a look at this graph here, you can see that GameStop slowly since 2016 on a steady decline until 2021 when it saw a dramatic increase. Some estimates saying that this week it has risen by up to 700%.
And that rise that we're seeing here, which is just so unusual, that's got a lot to do with social media.
It does, yeah. I want to take you to a forum on the popular social media platform Reddit. This is one known as r/Wall Street Bets. This is essentially individual users who have all grouped together to go against the flow. Now, these are potentially people who are investing in the stock market for the first time. It's something that's a lot more accessible and prevalent now in 2021 with a lot of apps, but at the same time, it also carries a huge risk for these people who maybe aren't as knowledgeable about the stock market as these big players. But these Reddit users on this forum, they're essentially grouping together, encouraging each other to buy stocks in GameStop and send its share up. Now, they're saying they're doing this to essentially fight against the system. They're just doing the market manipulation that they say hedge funds have been doing for years. Now, in terms of the consequences for this, for GameStop itself, this doesn't really have an effect on their ability or indeed their future as a company. But these users on Reddit, they will potentially have received a huge amount of money as an increase, buying these shares for a small amount of value and seeing that increase at some points this week by 5-6 times that amount. And on the flip side of that, you have the hedge funds who had bet against GameStop. They are now having to buy back those shorts at a hugely increased value and cover the losses, potentially billions of US dollars there.
And because of social media, you can see some of the huge numbers that they're able to get on board here. Now, of course, what usually we see a story developing online, we then get real-world reaction, and this has now gone from being something potentially of an inside joke and making a little bit of money to government investigations.
It has, yeah. As you said earlier, this has had a huge amount of reaction on social media right across the world, including here in Europe. And you have some big names, the likes of Elon Musk, CEO of Tesla, one of many people who just tweeted one word, GameStonk. Other people, like the US Representative Alexandria Ocasio-Cortez, noting how remarkable it is that you now have these small players fighting against these big hedge funds in the stock market experience. Now, the United States White House has said they are investigating. There's nothing illegal about hyping up one company's stock unless it comes to things like insider trading and insider knowledge. But you now have hedge funds who are very concerned. They are looking into other companies that they have bet against who have also, in the last week, seen their shares rise. We're talking about companies like Blockbuster, BlackBerry, AMC Entertainment, even Cineworld in the United Kingdom. Companies that investors are expecting to be in decline have been seeing shares rise. And we're seeing a lot of restrictions now being put in place. And incidentally, GameStop's share has since fallen almost as dramatically as it now rose. But this whole matter, based on one Reddit forum, that has caused a huge shock, and it's certainly shaken the traditional global stock market experience.
Thank you very much. Matthew Holroyd there joining us from theCUBE. Well, let's get more on this fascinating story with Susanna Streeter, a senior investment and markets analyst with Hargreaves Lansdown, and Randeep Somal, who's a portfolio manager at a hedge fund called M&G Climate Solutions Fund. Thank you so much for joining us both here on the programme. Susanna, amateur stock traders leaving the shorters short of cash. Is this not just the little man really taking it to big corporations and getting their own back?
It does seem as though that is what started this whole episode, certainly on those sites that you've been talking about, Reddit in particular. And that really seems to have fueled these stocks' dramatic rise. But then I think what's been happening is that other speculators have come in and seen these huge rises and want to get a piece of the action as well. And that is very concerning because it is speculation, it's not investing. And certainly we would really urge investors to be very cautious, not follow the herd, make sure that they're well diversified because they can really get their fingers burnt.
Randeep, you are part of a hedge fund. It doesn't deal with GameStop, it deals with climate issues. But I imagine your whole industry must be looking on aghast at what's been going on.
Hi, I don't work for a hedge fund. I work for an equity house. We're long only. We don't go short stocks whatsoever. And as your previous interviewee just said, this isn't investing, it's pure speculation. When you're looking to invest, you need to look at the fundamentals of companies. What are their cash flows? What are their growth opportunities? And we're in a situation today where effectively all they're doing is looking at which stocks are the most shorted and knowing that shorts have stop losses and have to sell out. So you pile into the stock and you force the shorts effectively to buy out at a very, very high price because they have to. This is just speculation at this stage, and this is not something that we would encourage or do.
Susanna, we have seen a huge rise in people getting involved in investing since the start of the pandemic, and that's been aided with the likes of apps such as Robinhood, where you don't really have to pay the fees that you have to pay on your platform, say Hargreaves Lansdown. What are the sort of warnings you would be giving to people? One thing I've always heard is never invest more than what you can afford to lose, but what else should people be looking out for here?
Really, investing is about the long term. It isn't about betting on a stock and an expectation that it's going to rise. You really have to look at the fundamentals of companies. Now, you can do that yourself, of course. You can pick your own portfolio of stocks, but you have to really do your homework and make sure that you are really confident in where you're putting your money. You can, of course, then invest as well in a fund where you have a fund manager who's making those tricky decisions for you if you really don't feel as though you have the expertise all the time to do that. So certainly the real issue here is looking at the fundamentals and making sure that you're doing your homework, that you're not just riding on a wave of speculation. Now, we have seen today most viewed stocks, for example, on our platform, AMC Entertainment, the second most viewed stock, GameStop, the first most viewed stock. So there's certainly been a surge of interest. And what we would say to investors is make sure you're really diversified. Think of having a real core investment with perhaps riskier stocks surrounding that, but certainly do not put all of your money on a speculative stock, because you really do risk potentially losing your money if you're not careful. And certainly with these huge rises that we've seen, with people jumping on the bandwagon, there are dangers.
Randeep, I remember when Uber entered into the taxi market, taxi drivers were up in arms because they knew that this was really going to change their industry forever. Now that we're seeing the rise of these apps such as Robinhood really opening up the market to investors who'd never ever thought of going in there, if we see this trend continuing, huge swings in share prices, I think American Airlines is one of the latest to have seen it, could this change the investing landscape?
No, I think this is a very short-term phenomenon, which we are looking at here. Longer term, you meet the management teams, you build out cash flows analysis, you understand the businesses, and you buy at the right time and you sell at the right time. What we're seeing right now is let's look at which companies are the most shorted. We're sitting around, we're in lockdown, we've got capital on our hands, we've got nothing else to do, and we'll watch the short positions disappear, and then we'll get out and then we'll move on to the next one. It's not a sustainable way of placing your capital. It's not even investing.
Susanna, just quickly, would you get involved in GameStop?
Would I? I would be very, very careful before I actually launched into any such investments. What we've got to focus on here in particular is the role of social media, because it's really adding fuel to the fire. Because a tip from somebody who's got a huge amount of followers, can lead to a rocket fuel on shares which actually don't have the fundamentals. And I think you've really got to listen to what the kind of mainstream analysts are saying, because actually what they're doing is they're doing a huge amount of homework for you. Read up about the stocks before you take the plunge.
Randy, same to you. We've got about 30 seconds before we hit the break.
Yeah, I mean, same thing. GameStop went to a market cap of 26 billion. That is not justified by either its revenue or its profitability. Who knows at what time that the bubble could burst, but you don't really want to be holding it when it does.
Randy Tommel joining us there from M&G Climate Solutions Fund, and Susanna Streeter from Hargreaves Lansdown. Thank you so much for joining us here on Euronews.